I've received a lot of questions from you guys that you want to know what are footprint charts and how do I trade and how I use order flow in my trading. So that is the main reason why I thought I'll have this bootcamp. Again, disclaimer, it's not going to be easy and you will obviously not learn everything in a single session. It's going to require a lot of dedication and hard work from your end in order to actually start earning money from order flow. So I just want that you guys get introduced to order flow and you know what exactly order flow is, so that this can be your starting step in your order flow journey. And I'll try my best to post more and more YouTube videos, and I'll also try to conduct more of these sessions. And yeah, it is obviously free of cost because I genuinely want to help you guys. And I really want this session to be interactive. It's going to be a little tough for me to unmute all of them, but the chat is open and I'll keep reading the chat. So if you have any questions or any doubts, then you can always ask and I will. Okay. Can you guys see my screen? Okay. Okay. So I just created a very rough PPT. Again, I don't really like to create PPTs, but the only reason I have it is because I want to not miss out on any points. I've just noted down exactly what I want to talk about. So first of all, we are going to be talking about order flow. Now, order flow is basically like a prescription. You are reading what is happening in the market and you want to either be a part of the move or you want to exit from your existing trades. Order flow is basically us. We are not fortune telling, but we want to be a part of the move that is currently happening. So we are not predicting the future. We just want to be a part of the move which is happening as of now. Now, that is what order flow is. And again, whenever you're trading order flow, it's the best that you trade in futures and not forex. If you're very intimidated and if you don't know about futures, it's okay. It is easy. It is, if you know CFDs, if you know forex, then it is the same. Futures are just separate instruments. And the reason why I like futures over forex is that futures are regulated by the CME, which is the Central Something Exchange, and which means that they submit their data on a regular basis to the exchange, to the CME, whereas forex information can be manipulated by the brokers, but CME cannot be manipulated. So I think it's always the best to trade in futures, and that is the first reason. Secondly, when you are trading order flow, you use the data which is submitted to the exchange, and the data submitted to the exchange are usually of the futures data. So when you are doing your analysis on futures, instead of converting it and trading on forex, you might as well directly trade on futures. So that is the main reason. And what instruments to focus on? There are various instruments. We have gold, we have Nasdaq, we have SPX, we have crude oil. You can even trade on stuff like water. But we are going to focus on one instrument to begin with, and that is ES. If you go on your trading view, you can see this S&P 500 E-mini futures, which is the ticker symbol is ES1 exclamation mark. So this is basically S&P 500 is basically 500 companies. It is an index of 500 companies in the US. So if the majority of the companies or if its constituents move up, then the index moves up. If it goes down, then the index moves down. This is so far the best instrument according to me when it comes to trading futures. So I will begin with that and I will explain this. So that is a little bit about futures and what instrument we are going to be discussing about. And again, when it comes to benefits of futures, the second benefit is that we do not have something called as a spread or slippage when it comes to futures. So when you are trading forex or when you are trading CFDs, you might have realized you might have realized that if you are entering a particular trade at, let's say, $10, by the time you actually buy it, the price goes to $12. So those two extra dollars you will have to pay. Now, those slippages or those spreads are something which can be avoided when it comes to futures. So this is exactly why I think that everybody should move to futures. And yeah, my favorite platforms as of now are Blueberry Futures, Funding Ticks, and Apex Trader Funding. By the end of this video, I'll share you the coupon codes. Anything you want to know, then you can always ask in the comment section or the chat section. Okay, is it clear until now? Yeah, all good. Okay, great. Let's move on. So that is exactly why I started futures, because I was so sick of dealing with the spreads and slippage when I was trading Forex, and I really wanted instruments where I don't have to do that. Secondly, ever since I started Orderflow, I wanted to use the data straight from it, because of which I started futures. Now let's talk about the auction market theory. And yes, it can be a little bit theoretical in the starting, but it is necessary because you have to always have your basics clear. So what exactly is auction market theory? Let's say that we go to buy a house. Now, there's a very valuable house, and we are yet to decide how much the house is there up for sale. So the person A says that they want to pay 1 crore for it. But then the person B comes and says they want to pay 2 crores. Person 3 says they want to buy for 3 crores. And then the person 4 says 4 crores. And there's nobody other than the person 4 who's asking or bidding for a price more than that. Then what happens? The transaction takes place by the last person at 4 crore rupees. That means that 4 crore is the price which the buyer as well as sellers have agreed to make a transaction on. So that's when we say that the market, the house has received a fair value price. It's called a fair value price because the buyer is also happy with the price and the seller is also happy with the price. So the same thing applies in the market as well. What really happens is, just a second, what is this? Who did this? Can you just remove this, please? I have one question. Yes, please ask. Okay. In order flow, we can see executed buy and sell orders, right? Yes, you can. We'll come to that. I just don't want to confuse you all with everything right now. Okay, so that is a little bit about auction market theory. The same thing even happens in the Forex market and the futures market, wherein the price keeps trading, keeps changing the price, the instrument keeps changing the price, keeps moving either up or down until and unless the market reaches a fair value. A fair value is where the buyer and seller, both of them agree with the price. Now we have two things. One is balance and one is imbalance. Now what we want to do is that we keep trading until the price reaches a balance. That is what we do. So we have two things. The first one is balance and imbalance. What does that even mean? Balance is when the buyer and seller both are happy. Imbalance is when either the buyer is happy or the seller is happy. So the kind of markets we want to actually trade in is the imbalance market. We don't care about the balance market, because if the price is balanced, then that just means that the price is going to be in a linear line or it's going to be in a horizontal line. because both the buyer as well as the seller, both of them are happy, which means the price is going to be something like this in a sideways market or in a consolidation. But what we want is an imbalance. If the buyers are stronger than the sellers, then the price is going up. If the sellers are stronger than the buyers, then the price is going down. Now, these are the kind of market conditions we want to trade, because these are one-sided moves and these are trending markets. We want to be a part of the trending markets and not an equilibrium type of a condition or a balance type of a condition. So we always want to be part of the markets which are in imbalance. Okay. And I hope it's clear what fair value is now. Fair value is when the buyers and sellers have reached to a... Okay. So let's talk about two types of market participants. So we have a lot of market participants, two types. The first one is passive market participants and second ones are aggressive market participants. Before that, let's just talk about the types of orders we have in the market. Let's say XYZ stock is trading at 2 rupees. I want to buy it right now at this particular price because I think the price will go to 10 rupees. I want to buy it at 2 rupees. I want to buy at the current market price. That is the market order, which means I am buying, let's say 10 shares. I am executing it at the market price, which means I buy it at 2 rupees. Cool? That is market order. Now let's say the price is right now currently trading at 2 rupees, but I want to, buy the XYZ thing at 1 rupee because I want the price to come down a little bit. From 2 rupees it comes down to 1 rupee. That's when I want to buy so that I can buy a huge quantity. So I think that the price is at 2 rupee, it will come down to 1 rupee and then again it will start going up, which means I have a limit which is set. I want to buy only when the XYZ reaches 1 rupee. So what I'll do then, I'll place a limit order to buy 10 shares. I will place a limit order to buy 10 shares at 1 rupee. What does that mean? That means market order is 2 rupees. I am not happy with the market order. I want to buy it at the 1 rupee limit order. Now this is a limit order. That's the difference between market order and limit order. Simple stuff. I know it's very basic, but still I'm just repeating it. Market order means you're taking whatever the market price is. You don't care if it's 10 rupees, you don't care if it's 100 rupees, whatever the market price is, you're taking it. That shows your behavior as a market participant. It means that you are very aggressive in the market. You are okay to take whatever price is there in the market. That shows that the market participant is aggressive. That is why these guys who place market orders are called as aggressive market participants. And then people who place limit orders, they are not aggressive because they want the price to pull back a little bit, to retrace back a little bit. So these people are known as passive market participants because they are not aggressive in nature. I hope you understood this. Just let me know if you have understood, then I will go forward. I have one question. In order flow, we can execute buy and sell orders, right? But what about dark pool orders? I will come to that. I don't want to confuse everyone right now. Disable participant annotation. Yes, I've done that. Yes, understood. Okay, cool. Let's go forward. So that's a little bit about the two types of market participants we have. Now, okay. So again, limit orders or passive market participants choose a precise pinpoint price to enter, whereas the aggressive market participants are okay with the slippage. They're okay with whatever the price is. Okay. Now, sell limit orders need buy market orders. Buy limit needs sell limit. This can be a little bit confusing right now, so let's just leave it for now. Passive market orders slows the price. What does this mean? When there are limit orders resting in the market, so as the market is going up, there might be previously pending limit orders in those areas. So what happens is that those orders keep getting executed, due to which the price slows down. So you need to just understand this, that the limit orders usually slow down the price and the market orders usually cause the big move or rallies in the market. If you want to write anything down, then please write it. Can you re-explain the market auction theory? Very simple stuff. We have two things. We have fair value. A fair value is when the buyer and the seller both are happy with the price, and a particular instrument is at a fair value. Whereas if the buyers are stronger than the sellers, that means that there is an imbalance and the price is going up. If the sellers are stronger than the buyers, then the price is going down. And yeah, those are imbalance, or that means that the buyers and sellers are at an imbalance. So we will keep is TV DOM data alright? Don't use any data on TradingView. I will come to that. That's a very important question, Venom effects, which you've raised. Don't use any of the footprint charts or DOM data on TradingView, because see, TradingView gives you data based on a particular tick size, but what we want to do our analysis on is a particular price size. So I will come to that. Okay, so if you have any more questions, please just ask, then I will move on. All good so far, doubt is clear. Okay, so that's a little bit about order flow and auction market theory. So earlier, during the older times, what used to happen is that the stocks and the currencies used to be traded in a physical arena, right? People used to meet in the same, people used to basically stand in a particular room and they used to shout the prices, and that's the way price of a particular thing used to get decided. If you have watched movies like Wolf of Wall Street and stuff like that, then you would know that. But when such a bidding used to take place in person, when people were actually facing each other, when the price, when you can obviously look at the behavior of the participants, you can look at the behavior of the people who were there, and you can actually see some physical cues. When I'm saying physical cues, I mean that a person, the market is getting tensed, or the people are getting really sweaty and tired and anxious. Those are the behavioral patterns which you could see in person, due to which you know that, okay, the auction is going to get weak now. People are going to reach a fair value because I don't see the enthusiasm anymore. Ever since we have computer trading, we are not able to see these physical cues. This is exactly why I like order flow trading, because in the footprint charts, the focus is not just on the price, but the focus is also on volume, and it is also on the human behavior and human psychology. So that is exactly why I do this, because see, whenever we are trading using candlestick charts, then you know that the focus is only on the price. We know what is the open price, we know what is the close price, we know the high price, and we know the low price. But what I want to really focus on is, along with the price, I want to see what had happened inside the candle, what kind of behavior I saw inside the candle, what is the volume of the buyers or sellers which is present inside the candle. That is what we are going to focus on. Oppo says, last point I didn't understand. Can you tell me which point? Then I can explain that. Okay. Auction market theory, imbalance, balance, equilibrium. I hope you understood this. Again, when I say equilibrium, all I mean is fair value gap, having an edge. Alright. So you might have seen a lot of YouTube videos. I'm sure that if all you 30 people who are there in this meeting, if you are here, that means that you have already explored a lot of different things in trading industry. You have done supply and demand, you have done ICT, you have done price action, you have used moving averages and all of that. You need to understand that if you are watching a YouTube video which says that you can earn money with this simple 5-minute strategy, you can wait for a crossover of the moving average and you can buy, that is not going to work. I'm sure that you know it with experience, that if something is very simple, then that will probably not give you money in the long run. Because if it's that simple, if it's really just a moving average and you have to buy when the candle closes, then everybody would be doing that and everybody would be a trader. So it is not as simple as that. You need to have an edge, you need to do something which nobody else is doing, and you need to have a system which is nuanced. I also know that a lot of people say that your trading strategy should be as simple that a KG student can also understand and do it. I kind of disagree, because I do think that there are certain nuances and there are certain things which need to be there, which need to be advanced in your trading strategy, which is why the reason I'm telling you this is that do not expect this strategy to be easy, or do not expect this to have like just 3 to 4 rules. It is, with time you'll get the hang of it, it'll be easy, but I'm just telling you that this needs a lot of work from your end. What is order flow? Is it easy? Like I answered, I just told you what order flow is, and it is not easy. It is difficult, moderately difficult, but if you actually put in the work, then the rewards are crazy. Also, I'm a 6-figure funded day trader, and I got my funding with using order flow. So again, when you talk about order flow, you need to understand that we are focusing not just on the price point, we are also focusing on the volume of transactions which are taking place. Trading supply and demand, forget the old stuff. Okay, so a lot of you guys might have already, let me just understand. Last point, that passive buyer attract buyer point. Yeah, I'll come to that, ignore that. Do you know volume, delta, cross and hedge strategy? Yes, but I don't really do that much. Sorry to interrupt, but how long will this class be? Maybe another hour? I'm not sure. Okay. So if you guys have been trading, then you know what is supply and demand and how people have been trading supply and demand. I want you guys to just forget the old supply and demand, and I want you guys to understand the way I'm teaching it, and just try to learn that and try to implement that. I'm not saying that you need to, everything that you learned is incorrect. I just don't want to cause any confusion. So just watch this webinar with a fresh mind, okay? So simply, let's just talk about it simply. What is supply and what is demand? Demand is controlled by the buyers, supply is controlled by the sellers. If there is demand for iPhone in the market, then the price of iPhone will keep going up. If the demand is more than the supply, then the price of the product will increase. Listen to me carefully. If there is an increase in demand for a particular thing, then obviously excess demand as compared to supply, which means the price of the good will go up. If there is not demand much, but the supply is excessive, then what happens? Then the price goes down. This is basic thing what I just told you. I hope you understood this small thing, because this is the essence of entire thing. Hicksfield says, is order flow available for gold? Yes, of course it's available for gold, it's available for NASDAQ, it's available for ES, it's available for natural gas, crude oil, water, pigs, pork, anything. You can trade anything using it. Okay, so that is supply and demand. Cool. Now, if there is a particular price point, something like this, okay, let's say this is the price point. One sec. Let's say there is a price level like this. Price went there, rejected this level, couldn't go up further this level, and then it came down. What does that mean? That means here we had some sort of a seller were present in the market. The buyers were going up, going up, going up, going up, but the sellers were very strong over here. They were stronger than the buyers, and they forced the price to go down. Don't you agree that this particular area is a supply region, because this level pushed the price lower? Very basic stuff, nothing difficult. Did you understand? Got it. But gold trades in multiple exchanges, right? So does order flow really help there? Yes, there's this one GC contract which is listed in CME. Okay, understood. Okay, thank you so much for writing the responses. That helps me. Your free meeting will end in 10 minutes. Okay, I'll share. If the meeting ends, then I will share another link on my Instagram. So remember that. Cool. So this is a supply region. What exactly is a supply region? A supply region is an area from where sellers were showing their strength. That is it. Forget candles, forget everything. Just look at this diagram. Now let's say there is an area like this. sellers were going down, 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 down. Suddenly, at this level, buyers took control and the price went up. What is this? This is a demand region, right? Because this is the area where a lot of buyers came into, sorry for the handwriting. Yeah, this is the area where a lot of buyers came into control. So this is a demand area. Basic stuff. Literally nothing difficult. Just remember these diagrams, and now when we'll go into the charts, you will do the exact same thing what you did in this particular diagram. Okay, this is a supply, this is a demand. Supply is where sellers took control, demand is where the buyers took control. Okay, now let's talk about some very interesting concepts. So supply and demand. Supply means sellers, demand means buyers. Price in any market moves because of the imbalance between these two forces. If there is a balance between these two forces, then in that case, obviously the price will be in a sideways consolidation and it will not move. If more buyers want something than sellers are offering, if the buyers want something more than the sellers are offering, price will go up. If the sellers are willing to sell more than the buyers want to buy, price goes down. Now you all know what these candles are. Green candles are bullish candles, red candles are bearish candles. Green means it opens below, closes above, red means opens above, closes below. Now I just want you guys to remember these three words: impulse, rest, impulse. What does that mean? Impulse means a big move. Rest means a resting candle. Impulse means another big move, another impulse. Look at these three candles. Red candle, red candle, red candle. It's a 3-candle pattern. The first candle is a big red candle. It's an impulsive red candle, a big red candle. And then we have a rest candle, small red candle. And then we have another impulse candle. Our pattern is formed: impulse, rest, impulse. Now let's see the green ones. 3 candles are going up. Big green candle, impulse green candle, rest green candle, resting green candle, impulse green candle, impulse. Impulse, rest, impulse. No matter the color does not matter. Now again we have a 3-candle pattern. First the price came down, here it went further down, and then it came up. Red candle, a big red candle, a big impulse candle. Resting candle, small body candle, it rested, went a little down. Impulse green candle, it went up. Impulse, rest, impulse. Cool? Same way, if I change it like this, and the small body candle can be red or green. It just needs to be a small body candle. It should not be an impulsive move. So if it's like this, big green candle, impulse, rest candle red, impulse candle red. Impulse, rest, impulse. Are these patterns clear? Impulse, rest, impulse. Alright. Please repeat. What do you want me to repeat? I have. Okay. दीदी हिंदी में ही समझा दीजिए if everyone's comfortable. I'm not sure अगर सबको हिंदी में सुनना है, पर अगर आपको कोई specific चीज़ जानना है then let me know. I'll explain that in Hindi, but I would like to keep it in English for this session. Okay, it is very clear. Can we consider rest candle as doji? Of course. If it's a doji candle, then it's a rest candle. What does a doji candle mean? A doji candle means that the body of the candle is very small. We want our candle to be a resting candle. We want it to be a small candle. Resting means small body. Impulse candles means a big body. It's that simple. We'll see examples. It will be even clearer. Now, if I go on the chart and if I try to show you, let's see. Also guys, the meeting might end soon. If it ends, then please wait for another link on my Instagram story. Let me show you a perfect example. Okay, one sec. Okay. No, I just want the example to be very clear. Alright, let's just take these 3 candles. Okay, let's do the white candle, which is a green candle, the blue candle, which is a red candle, the blue candle, which is a red candle. Okay, I hope you got it. I'm talking about these 3 candles. Now, the green candle went up, a big green body candle. Then we have a small red candle, which is a resting candle. And then we have a big red candle, which is an impulse candle. So we have impulse, rest, impulse. Cool? That's all I was talking about. Shiva Kumar, would you consider wicks with small candles as well? Of course, I will. Time frame, any time frame. Which is best platform to trade futures? I would go for Blueberry Futures, Funding Ticks and Apex Trader Funding. You can use my code SOWMYA for an exclusive discount on either of them. ये सब सीरियस ट्रेडर्स हैं, हम सबका एक टेलीग्राम ग्रुप बना दीजिए या डिस्कॉर्ड ग्रुप. मेरे पास ऑलरेडी एक टेलीग्राम ग्रुप है. आई विल शेयर द लिंक सून. Let me just give me a second. Can you guys see my screen right now? Chala baga cheptunnaru. Thank you so much. Hello Soumya, how much time it's gonna take? Yes, don't worry, I'll record the thing for you if you want to leave. You can arrange Q&A sessions in the weekends, please. I will consider that. दीदी ये सब सीरियस ट्रेडर्स हैं, एक ग्रुप अलग से बना दीजिए जिससे डेली हम सपोर्ट कर सके एक दूसरे को. Please record if I miss due to some office work. Okay. Market AI, how to use, please guide. I will come to Market AI as well. Cool. Let's just quickly get done with this, then I will go on to the other tools. Let me know if you can see my screen. And I have right now updated my Zoom, and I've taken the upgraded version, so now the meetings will not end abruptly. It's for unlimited time. I should have just done this before. So the auction market theory works only best for futures. It can be used for CFDs as well. See, you can do your analysis on CFDs and you can do your analysis on futures and then trade it on CFDs. My point is, if you're doing your analysis on future, you might as well trade futures directly. Okay guys, can you see my screen? Investment done right for Zoom. Yeah, I should have just done it before. How do I contact you, ma'am? You can contact me on my email, which is on my Instagram, or you can connect to me on my Instagram. It is @SOWMYASASUNN. Also guys, just a disclaimer that there are a lot of fake pages on Instagram and there are a lot of phone numbers and telegram groups which are impersonating me. Just to be sure, I would never contact you first and I would never ask you for any money. So please don't trust anybody like that. If you come across them, then just know that they are scammers, and always talk to me on my main account, which is when I have a verified, meta verified Instagram blue tick. That is the only real me. Do not trust anybody else. Okay, so that is the 3 types of patterns. Now, my idea of trading order flow is that I want to enter trades from supply and demand, okay? But I don't know how to enter. If I know that this particular area is a supply area, I want the price to go and reach the supply, and I want to take a short side trade here, but I don't know when to take it. The moment price is here, if I enter into a short trade, sometimes price will go down, which is great. Sometimes the price touches the short area, goes down, goes up, goes down, goes up, and then gives you the big move. My point is, I might have entered over here and lost money because the price went up. I would have entered again here and lost money because the price went up again into the same supply zone. Now I think that 2 times I was wrong, so why will I enter the third time? But if I would have entered the third time, the price actually went down. So the main thing is, our idea is correct. The moment price reaches a supply region, you know that the price will go down. But we don't know when it will go down. Because the first time it goes in, let's say price went here, you took a short and your stop loss is above this. The price goes and takes you out and then goes down. So what you want to do is, you want to be part of this area rather than this fake move which occurs right before that. That occurs due to liquidation. Now, what I want to tell is that some people, what they do is, they mark a supply region on a higher time frame and then they change their time frame to a lower time frame and they wait for a market structure shift or whatever, and then they look for a pattern like this. That's when they enter into the short trade and then they go down. I used to do that too. But what happens is that by the time this move occurs, the price already moved so much that now price will not give a big move. I want to enter as early as possible. I want to enter into the trade right over here. Why should I enter after the structure change happens? Why should I enter and only take this much? Why can't I enter from here? That is something better, right? So what we are doing is, on TradingView, we will mark our supply and demand zones, okay, like this. The moment the footprint chart or the order flow chart confirms a short trade inside the supply area, that's when I enter the trade, okay. Now if there is a demand, now you know that whenever the price comes down back to the demand area, it will go up. The price came here, I think it will go up, so I buy it here, but then the price goes down and I lose money. Now it goes up. Now I think, okay, it's actually going up, let me just buy it. But it again comes down. Now I lose the money 2 times. Now I don't have money left to enter here. But what really happens is that here the price goes up. So how do you only capture this? How to not enter during these false moves? That is exactly what order flow tells us. Rather you are waiting here, but footprint charts, order flow charts do not confirm it, no trade. Again here you are checking the footprint charts, it does not confirm, no trade. Again, don't worry, I'll show you the footprint charts. I am right now explaining the concept. Here, the footprint chart also confirms a buy trade, so you entered and you made money. While other people are doing price action, while other people are trading only supply and demand and market structure shifts, you are trading order flow. So what happens is that you will save a lot of money by not losing money in these particular parts. That is what I do. I'm trying to explain it in the most simple way possible because I don't want to overwhelm you guys in the first session. I wait for my supply or demand region. I look for my market timings. I wait for the US stock market to open. I wait for my footprint chart to confirm on either a demand or a supply, and then I enter. That's exactly what I do. Did you guys get it so far? Back to meeting. दीदी क्या कोई ऐसा AI है, कोई ऐसा टूल नहीं है जो हमको इम्बैलेंस शो करता है रियल टाइम में? Excited to see real time order flow chart. Where do you take entry and see the logic theory is boring. I know it's boring, but if you do not understand this, then you will not be able to take. Since you are showing a 4-hour chart, it looks like a swing trade strategy. No, I'm just showing you an example. Got it. Understood. Timing is the most perfect confluence. Yes, we are interested. Hair imbalance. Also, TradingView footprint charts are good. Can we rely on it? Great question. Who asked that? Falak. Great question. And your answer is no. You cannot use TradingView for footprint charts. So when you open your footprint chart, when you open your TradingView, you can go here and you can see that in these types of charts, we have volume footprint charts. I don't have it enabled, but please do not use it. Now let me try to explain you what the reason is. Whenever we are trading, we want to know the footprint chart data of a particular price level. We want to know how much volume was transacted at this price level. But the volume footprint charts which is there on TradingView, that does not talk about a particular price level, that basically talks about how much volume has been transacted at a particular tick level. If you are into Forex, then you know we have pips, right? What are pips? Pips are the units of movement, right? In the stock market, the units are number of shares, 1 share, 2 share, 10 shares. In the currency market or the Forex market, we have pips, 10 pips, 100 pips, 200 pips. In the futures market, we have ticks, okay? So the footprint charts on TradingView talk about the volume which is transacted at a particular tick level. That is not what we want. We as traders, we want to combine the price level along with the volume level, and that is not there on TradingView. That is only done on Orderflow softwares, professional Orderflow softwares. Now yes, I will be very honest from the very beginning, the Orderflow software which I use is a little bit pricey. It comes with a price, but I think it's about 7,000 rupees per month. But again, let me tell you guys that the way you will use it, it will change your trading journey, and that will actually help you make a lot of money. So you need to be okay with investing a little bit of amount, because you need to have a professional order flow analysis software. You can check out the platforms. We have Deep Charts, we have Sierra Charts, we have Artis, all of them. But me personally, I've checked out Sierra Charts and I've checked out Artis as well. Artis is something, I'll just show you guys the website. This is how you will find. I really like this advanced trading software, because this is user friendly and this is something which resonated with me as compared to Sierra Charts. So I go with this, and I would recommend that you also go with this. But if you're not happy with this, then you can first of all just try it out for free and see if you like it and see if you're actually able to make money using it. And you can also check out Sierra Charts. But yeah, I would recommend Artis software. I hope you understand the reason why I use Artis and not TradingView. This is the reason, because I need real-time data. I need data which is at a current price level and not the volume level. And I also need the data to be quick. As a day trader, if there is a delay in data even by 2 seconds, I lose on my money. So I need to invest in softwares which will give me quick data at that particular second without any delay. Using other places will give you that delay, and which will obviously be very hefty on your pocket later on. That's one thing. One more thing, guys, be aware, if you're new to futures, on TradingView, the S&P 500 or any futures data, the data which you have is going to be a 10-minute delay data. Please keep that in mind. If you look at my chart, I don't have the 10-minute delay data, because I've purchased the TradingView CME data feed. So just know that if you don't want a delay, then you need to purchase it from TradingView. I think it's about 800 rupees per month. If you don't want this, I know all of this is very basic, but I know that a lot of beginners don't know about all this. That's why I'm telling you all this. Anyway, also TradingView footprints, do you enter on order blocks? Don't you enter on order blocks? I do, a little bit. Should just bought my premium. Prab, thank you, I will check it out. Combining market profile with order flow is really good, but good for index. You know, Deep Charts just launched. TradingView feed from the broker, not exchange, not at all reliable. No, I agree with you, which is why most of my analysis is done on Artis. I do my analysis on Artis, but I just use TradingView as, you know, something which is very visual for me. Show OF chart. Deep Charts is more easy. Yes, understood the reason. How can I backtest this? Artis is not for CFD. TradingView is definitely delayed. I have purchased CMD data to trade futures. Good. No, it is free, provided by prop. Yeah, some of the props give you free. Artis mein demo milega? Yes. Can you make another session on weekend about psychology? I will try my best. CME purchase for what reason on TradingView? Because I do my analysis and I like to draw my supply and demand zones on TradingView. Can you show your Notion journal? Is the data delay for MCX futures as well? No, no, no. I don't think there's any data delay for MCX futures, but however, check it, but I don't think so. So yeah, let me now just, the last part of the meeting, I will just show you guys my footprint chart and connect the Atos software. MCX मत करो, slippage आएगा. Props provide CME level 1 data for free trial. For real time, you need to purchase paid plans of TradingView. Exactly. I'm not getting into the detail of level 1 or level 2 data right now because, let's be real, this is the first session and I don't want to overwhelm everyone. Okay, so I'll just give you again, I know it's theoretical, but a little bit about futures data I want to show. Does funding text provide CME data? Nope, I don't think so. Let me just join this from, so basically Atos is not, you cannot really download Atos on MacBook. So you can only download Atos on Windows laptops. So I want to join this meeting from my other Windows laptop. One sec. What is the meeting ID? What is the meeting ID? Can somebody help me with it, please? Oh, one sec. 8 5 3 5 5 7 4 3 5 2 7. Thank you very much. Passcode J64M0D. Okay, thank you guys. Okay, can you guys still hear me? And can you see my screen from the other laptop? No, just a sec. Now? Okay, but you can hear me, right? Okay, so I've connected my other laptop. Now I'll take you guys through Atos, which is the order flow software which we will be using. And I'll also share the link of the Atos software towards the end of the meeting, so don't worry about that. What is happening? Yeah. I'll just go on my Atos. So I've installed Atos on my laptop. Again, I'll be very honest with you guys. Initially, when I used to trade using Atos, I used to be very intimidated and I was very scared about it. but let me just tell you that it is not that difficult. It is okay. You will just get used to it like anything else. So this is a little bit how it looks. I hope you can see. Let me just change this to a demo account because PA account is my funded account and I don't want to use that. Okay, this is my demo account. This is literally how my artist platform looks like. Looks scary. Siddharth says looks scary. It is not scary. That is why I have this meeting. I'll break it down for you guys. So you can see that you have 3 screens. Let's break it one by one. This is my first screen. Cool. What is this? This is literally my normal candlestick charts. Here you can see the timings: 1 minute, 5 minute, 10 minute, 15 minute, 30 minute, 1 hour, 4 hour, daily, weekly, seconds, 1, 5, 10, ticks, 150, blah blah blah, volume, blah blah blah, whatever. I don't care about anything that's written. I know how to use TradingView. We know how to use 5-minute chart, 10-minute chart, 1 hour chart, 4 hour chart. That's all I have to do. Whatever chart I want to see on TradingView, that is what I will see here also. If I want to see a 4 hour chart, I'll just change it to 4 hour and then the data will be downloaded and you will get to see the chart. This is nothing. The first screen is normal candlestick chart. Ignore the bubbles right now, but it is just a normal candlestick chart which we have been seeing on TradingView. Just the normal candlestick chart. This screen is clear. Any doubts? Genuine question, you really do use Atlas or you are promoting? This is not at all a promotion. I genuinely use Atlas. If you watched my videos, I take all my trades on Atlas. Look at this. Let me just show you. This is my account. This is my Apex PA account, which is my funded account with Apex Trader funding. I've connected it with Atlas. So this is not at all a promotional video. This is just something I really like, which is why I also talk about Sierra charts also, that I did try it, but I didn't like it as much as Atlas. Ma, please tell us how to backtest order flow. Got it, understood, no doubts, no doubts. What is your win rate and experience? Falak, okay, cool, no offense. That is okay. What is your win rate and experience? My win rate as of now is 75%, 70 to 75%. My experience is 4 years. However, I've been funded over the last 1 year. Is 15 days artist trial enough to understand it and learn? Yeah, I think it's good enough to begin with. But yeah, anyway, so I will just show you guys one thing. Where is it? Yeah, so I just showed you guys the first thing. Ma'am, which software is this? This is Artist software. I will give you guys the link of the same after the meeting, okay? Then you download it. Right now, let's just focus on it. So the first screen which we saw, this one is normal candlestick chart. Nothing to be scared about. A normal TradingView candlestick chart, whatever you see on TradingView. Now let's come to the main sauce, which is the footprint charts. This is what the entire sauce is about. This is what I keep doing. It looks like this. Scary to look at. I agree. It looks very scary. A lot of numbers, a lot of patterns. But this is what you are going to use. This lines which we have, let me remove it. Don't be scared. Okay, I've removed it. Just look at this. Take a moment to sink in and just look at the charts. If I zoom this out, they become normal candlesticks. Cool? If I zoom into them, then they become footprint charts. Look at this. So you see, this red is the body, this green is the body, this red is the body. Whenever I zoom out, they become just the candles. So the essence of order flow is that order flow takes into account the volume of what kind of transactions have taken place inside it. We are able to see what is the human behavior inside of the price candle. However, if you look at just these candles, if you look at just the candlestick charts, then you can only see the price level and the price difference, and you cannot see the volume which has taken place inside it. Okay? Give me a moment, I'm getting my charger. Until then, you just look at this and look, this is a live chart right now of ES, micro ES. This is ES, right? What I was showing you, SPX 500 E mini futures. This is a live chart because right now the market is open. Just look at how it's moving. Okay, I'm just getting my charger. Hello. Hello. Can you hear me? एनवाई सेशन से पहले कुछ ट्रेड नहीं करते, मैं स्टॉक मार्केट ओपनिंग के बाद ही ट्रेड करती हूँ, विच इज़ 8 PM इंडियन स्टैंडर्ड टाइम. Keep psychology session on weekend. I will try my best to. I will for sure keep, but I'll let you know about the date. Okay, so you can see until now how the charts were moving, right? The price is currently moving, right? Why? Because the market is open right now, and you can see that the footprint is moving. Now, one thing you need to understand is we have something called as time, right? Which is the candlesticks which we use. In 5 minutes, one candle closes. Next 5 minutes, another candle. Next 5 minutes, another candle. With my experience and with the years of research, I have understood that timing something because the candle is closing at a particular timing. Because in one time, the candle can be this big, right? Within 5 minutes, a candle can be this big, but it can be this small too. I want candles to close according to range. What is range? If my particular instrument moved 5 points, I want a candle to be plotted. Whether that 5-point range happened in 5 minutes, 10 minutes, 1 hour or 1 day, I don't care. I want the candle to close only when there is a movement of 5 points. Okay, did you understand what I'm trying to say? Is this recorded and uploaded on YouTube? Yes, I will record and upload. Okay, I'll repeat it again. If I have a chart of, let's say, right now I have a normal chart of 4 hours. What does that mean? Each candle has opened and closed in a period of 4 hours. Every candle shows 4 hours, right? Now, the one candle moved this much, the other candle moved this much, the other candle moved even further much. There is another candle which moved only this much. But all of the candles have moved in the same like hours. All the candles took 4 hours to be formed, right? Now my point is, I want my candles to look of the same size. Is it possible? Then you need to have some other criteria. You cannot have your candles closing according to time. You need to have your candles closing according to something else. Let's say I want every time a particular thing moved 5 rupees. Just an example. I want the candle to close. Whenever the price moved from 20 to 25, a candle gets plotted. Whenever the candle moves from 25 to 30, a candle gets plotted. Whenever the candle moves from 30 to 35, a candle gets plotted. The candle can move from 30 to 35 even in a minute, even in 10 minutes, even in 15 minutes, even in 1 day or 2 days. I don't care about the timing. All I care about is the price. The particular candle will be closed only when this much range of move has happened. That is what is known as range-based charts or range-based candles. People only talk about the timing related candles. People only talk about the hourly candles or the weekly candles or the daily candles. But has anybody ever seen range bars candles? That is why I'm saying it is very important that you need to have an edge. Just because something is a little bit scary or intimidating, that doesn't mean that you should ignore it. This is something very cool. If after this meeting, if you guys download the Artist software, and if you actually go through what I have explained, you will be mind blown and you will be really shocked at what kind of crazy stuff I'm actually telling you guys and how much this can reward you if you put in the work. So I hope you understood what range bars are. Now, you can see my footprint charts, right? This is my footprint chart. Here I have my ticker instrument. I will just change the ticker to ES. Now these are my favorite instruments. You can see. If you guys want, I will put it on my Instagram story also, so you can remember. The first one is ES, which is what? E-mini S&P 500. You know what that is. And then we have NQ, Nasdaq, CL is crude oil, GC is gold, 6C is euro, BTC is Bitcoin. Ignore everything. Focus on one instrument. Only focus on ES. Become a pro in ES, then you can go on to all. I will say just focus on ES. ES is E-mini S&P 500. Let's go to E-mini. Okay. This is how the chart looks. Now, one thing you need to understand is I'm using 20 range bars. Don't ask me why, because I tested 17, I tested 50, I tested 24, I tested everything. Right now my range bars are usually from 20 to 21 to 23. That's all. I just keep changing it from 20, 21, 22. But then I'll say keep it 20. Keep your range bar as 20. Now you know each candle closes only when there is a movement of 20 ranges, right? 20 units. I don't want to confuse you all right now. Okay? So if I zoom into this footprint chart, if I have to break a footprint chart down, then how will I break? Let's go to this candle, this red candle, since it has been closed. What does that mean? Here you can see that you know what a basic red candle is. Opened here and closed here. Body is opening here and the body closed here. So this is the opening, this is the opening price, this is the closing price. What is this extra level which is above the body close? This extra level is the highest point. So this is my highest point. Just like how we read in a candlestick chart. Let's go to the previous one. Let's see this one. Again it's a red candle. Opened over here. Closed over here. There is no lowest point. Close is the lowest point. And since there is extra which went up, this is the highest point. Now let's go to a green one. Green candle. Opened here. Closed here. There is no high point. But the price went this low. There is no body beside it, but it did go and it did trade till here. So this is my lowest point of the day. Cool? Did you understand this? Did you understand how to read a footprint chart? It's very important. Can you please zoom in for a clear view? Yeah, sure. Have you joined from a phone? Yes, yes, yes. Does Atlas have volume bubbles in heat map? It does not have heat map. It has volume bubbles. Okay. Got it? I will zoom in more. But did you understand how to read a footprint chart? This is the most important thing. Can you please explain once again? Okay, I'll do it again. This is a green candle, right? Wherever the body opens, that is your opening price. Wherever the body closes, that is your closing price, right? And then here the body has ended, but the price did trade till here, right? What does that mean? This is the lower wick, like you see in a candlestick. This is the lower wick. This is the low of the day. Is there a high for this? There is no high, because the last point in this footprint chart is the closing price. This is where the body closed. The price didn't go any further, so there is no high. I hope it's clear how to read a footprint chart, guys. Let me know. Got it, got it. हीट मैप के बारे में समझा दीजिएगा दीदी. हीट मैप मैं अभी नहीं कर सकती, बहुत मुश्किल हो जाएगा सबके लिए, आगे करूँगी. Okay, so it's great that you guys understood what the footprint chart is right now. One point of NQ is 4 ticks, but how many ticks for ES is 1 point? I think it's 5 ticks. I'm not sure, but I'm really not sure. I need to check that. Just chat GPT it. See, now certain things I don't know because I don't use it in my trading. 20, oh sorry, I think it's 20 ticks. I don't know. Just check that. I don't know. Okay. Now, let's just focus on one footprint chart. Let's just focus on this big footprint chart. Nothing else. Okay. There is a left side column. This is my left. There is a right side column. This is my other thing. Now, what are these? What do they signify? This side with the blue bars talks about the volume of transactions that have been taken place inside. This shows the volume. Remember what I'm saying. This side shows the volume. This side, the one where my cursor is, talks about the, I don't want to say the word, you'll get scared. It talks about the delta profile. I'll explain what delta profile is. But did you understand? This one is volume, this one is delta. Volume, delta. Volume, delta. Remember that. Okay. Now, what is volume? Volume is quantity, obviously. Number of people who have participated. If these blue bars, here you can see there are a lot of blue bars. This shows that in this level, a lot of people were participating, a lot of volume had been taken place, a lot of people were, taking place in this particular area, taking trades over here. Here, a lot of volume had occurred. Now, let's go up. Here, the volume bars, the blue bars are very less, very small as compared to these big bars. Here, I can see that the volume bars are very small. What does that mean? That means that the volume was not very much over here as compared to this, right? Here we have less volume, here we have more volume. So you got that? Cool. Where are we going to spot rest, impulse, rest, footprint or normal chart? That is normal chart. We'll come to that. Did you guys understand what I just said? Tell me quickly, then we can wrap up the session also. I think you all are getting bored too. Okay. Okay. So volume is here and this is the delta. Now let's talk about what is delta. Okay. Now, nope, it's not boring at all. Thank you very much for saying that. Now, see, if there is a candle, if I am saying that the net participants were buyers, what does that mean? Net participants were buyers. What do you understand by the sentence? Write it in the chat box. Net participants in a candles are buyer. Let me explain it further. Look at this. This is a candle. What color is it? Red candle, right? What does a red candle mean? Price went down. Look at the delta here. Delta is in green or red. Just look at the color. Delta is green or red. The delta is green. What does that mean? That means in this particular candle, we had 90 more buyers as compared to the sellers. We had 90 more buyers as compared to the sellers. Let's see something before. This candle is a green candle. This is a green candle, right? Let's see the delta. Delta is in green color and it shows 253. This means that this particular green candle had 253 more buyers as compared to the sellers. Let's see more. We have one more green candle. Let's see the delta. The delta is 245. We had 245 buyers in excess as compared to the sellers. Now let's go and see something red. Okay, now we come to the red area. Red is in minus. That means we have more sellers than the buyers. Again, I will upload this on YouTube. Please, if you're serious about this, please watch it again. Please make notes. Please download artists. Practice all this. Then you will be able to understand it better. This is a green candle, right? What is the delta? Right below it, minus 45. What does that mean? This green candle had excess of sellers as compared to buyers, and the net sellers exceeded by 45 level. Let's go to the previous. We have a red candle. A red candle is there. The delta is 220. We had 220 more sellers as compared to the buyers. Did you guys understand what delta is, and did you guys understand how to know how much delta of one particular candle, how to see? This is something anyone can do. Look at the candle, go below the vertical area, see what is the delta. You know what the delta means. Okay? Yes, got it. Today got to know there is a lot more to learn. You made it so simplified. Thank you so much. Yes. Thank you. Cool. According to you, future performs are easy to pass or normal? I will say futures. I'm biased. I really like futures. Okay. Just so you know, you 35 people who are still there in the meeting, you need to understand that you guys are very, very smart. The fact that you are still in the meeting from the last 1.5 hours says a lot about you. Earlier there were 50 people, but already a lot of people left because they probably found it boring or they found it very difficult. But if you guys are still here, then I know that you are all dedicated, and I will do my best to help you guys. I'll bring a giveaway to you guys. Show me that you are learning this, and I will gift you guys funded accounts, and I will help you guys grow with me, and I will bring you guys the best discounts and the best webinars. And yeah, that's a little bit. Can you repeat the delta part again? What exactly do you want to know? What is delta? Delta is buyers and sellers. If buyers are more than the sellers, or sellers are more than the buyers. If the delta is in red, that means sellers are more than the buyers. If the delta is in green, that means buyers are more than the sellers. Okay? Okay? That's it. Nothing else. Okay. Now, listen to me very carefully again. Let me just show you a perfect example. Yesterday there was an example actually. No, wait, not this. 4K, 1K, 1K buys, 3K buys. Okay, very important thing. Look at this candle over here. The candle is in red color. What does that mean? That opened above, closed below. Price opened at 10 rupees, closed at 5 rupees. What is the pressure like? The pressure went down, the price bent down. Price went down. What does it mean? That means the sellers were stronger than the buyers. That's what it means. Sellers were able to drive the price low. Now look at what the delta is talking about. The delta is in green color, which means buyers were more than the sellers. The delta is saying 1k buys. There were 1k extra buys as compared to the sellers. Isn't that kind of crazy? Price closed red. It shows that sellers are strong. But the delta profile is saying that we had 1k of extra buys. What do you understand from this? What do you think this means? Please be interactive, guys. Huge absorption of buyers. Amazing, amazing. Nothing. Positive delta since more buyers. Very true. More orders. Very good. Okay. Big player entering. Big player, Gautam, big player entering towards where? I'm talking about what does it mean? Price is saying that they want to go down. But delta is saying that buyers are here. What will you do? Buy limit orders exhausted, more room to go up. That means institutions are not allowing price to go away. Wait. Okay. So if the delta is positive, there is some sort of divergence. Carryover of volume from previous candle. Limit orders punched. Okay. It's really nice to see your answers. Now, let me tell you what this is. If I have a red candle, this is showing me that there are 1k buyers. Despite so many buyers, the sellers were still able to close the price lower. I'm repeating myself. Despite the net delta being positive, despite the delta being extremely positive, look at this. This is not 16 buys, 10 buys, 10k, 10, 15, 20, 100, 200. This is 1k buys. This is 1000 buys. The k is what actually gives me a lot of conviction, because it's not a small number delta. It's not that just 4-5 buyers exceeded the sellers. It's 1k buys. Even after having 1k extra buyers, extra delta, positive delta, even after that the price closed bearish. This is going to give me a short opportunity. This particular candle is going to confirm for me to take a short trade. I think the price will go down from here. This is my confirmation candle. Did you get it? Again, context matters, direction matters, timing matters, zone matters, everything matters. Footprint chart is only my confirmation criteria. Okay? If there is a supply area, I know price is going to the supply area, rejecting from there and going down. Price is at my 4-hour supply region. There I find a footprint chart like this, which shows me a red candle with very positive delta. And this pattern is occurring in my supply region. What will I do? I will take a short and I will place a stop loss above this, and then I will book my profit. Isn't this something you can do if you can backtest it for a period of time? If you can practice this on your charts, don't you think this is doable? Don't you think you have an edge as compared to other people? Because you are using a tool which many people don't use. You are not only taking decisions based on the price, you are not taking trades only based on the price points. You are also seeing what volume is being taken inside that. Now, similarly, let's see another example. 1k. Let's look at this candle. Amazing one. We have a green candle, right? Green candle means price opened here, went up, closed here. Price opened here, went up, closed here. Shows that it is a positive candle. But what does the delta say? The delta shows there has been 1k net selling, net buying, whatever. Which means we had 1k of additional sellers as compared to the buyers. Ideally, if there was so much of sellings, ideally if so much selling has taken place in any candle, then this candle should have been in red. because that's what volume delta is telling me, that we had so many sellers. Even after having the presence of so many sellers, still the price went up and closed green. This is showing me that the buyers were able to pull the price up and close the price up despite having crazy sellers inside. This gives me a confirmation to go into a buy trade, go into a long trade. I will enter above the buy here, I will stop loss below the low. Enter above the high, stop loss below the low. Again, whenever I see a candle like this, can I just enter because I'm seeing this? No, you can't. It really matters. The area from where you're entering really matters. You need to see, you need to have whatever you're doing. If you're in this meeting, I'm sure you have a strategy of your own from before. You mark supply and demand, or you wait for London highs to get swept. You take short trades. You wait for Asia low to get swept before taking buy trades. Do whatever you want to do. Start with that. Just enter only when your order flow confirms. That is something I want you to do. Okay. One more thing. Let's say this is your demand area. Let's say that this is your demand area. Okay. Here you can see below we have a lot of volume. As we go up, we don't have volume, right? But below we had a lot of volume. What does that mean? This is our demand area, by the way. Okay. This is our demand area. Price came down to our demand. Price was consolidating and a lot of volume of transactions were traced over here, and then price went up. This area is where I have a lot of orders left. I don't want to confuse you guys, but there is really a lot to learn. Same thing over here. Let's say this is a supply region. Price went there, lots of volume was transacted over there, and then here there is no volume. So here I know it's very strong. So you see the next price did not break it and it went down. Okay. You want to see how a demo trade looks like? I will show it to you. I'm obviously taking a trade on my demo account because it's not my trading time yet. My trading time is when the US stock market opens. So let's just assume right now I want to take a buy trade. I'll do buy market. I'll place my stop loss. Let's say I place it right below this. Just an example. It is my demo account. And look at this. Already we have $62 profit. And you can place your target. Let's say this is my target. I'm risking $2,000. I wanted, right now the entry was late, but I entered above this footprint chart. Stop loss was below this footprint chart. Target is until wherever I want to book and keep. It's that simple. It looks that simple. Now this is obviously my demo account, but what I do is here I have my Apex PA account. This is where I take my trades. This is my funded account. And I also have a funding ticks account, but unfortunately funding ticks cannot be connected to Atos. So what I do is that I take my Apex trades directly from Atos and I copy the trade to my funding ticks account on TraderWeight. So if you want to go for prop firms with I'll just say that try to go with firms which allow you to trade on Atos directly. Check it out. I don't know which one does, but Apex allows, I think TopStep allows, TopStep allows, and MFU allows, whatever. So see, right now we are up by $125. If I have to close my trade, I close my trade normally, like we do. That's it. Simple stuff. Okay. So guys, I don't want to go any further. Just so you know, this is not everything. There is still so much more to learn. This is just the beginning. I just wanted to introduce you all to what this really is. So don't think that this is everything and you know everything. You have to still learn more and more about this. But yeah, now you guys can ask me your questions. You guys can ask your questions now. Let me read your questions. You are the best mentor. Thank you very much. Ma'am, have you tried deep charts? Apex is good, yes. FX Flow, Trade Copier, Trade Syncer. Thank you. Looking forward to the next class. If you use Apex or any other firm, we will get live data, but do we get Footprint 2 for free? Nope. It's possible to practice order flow. Yeah, you can practice order flow on Artis only, just like how you use TradingView Replay, just like that. From where did you learn all of these? A lot of different areas. I don't have one place where I learned. Thanks for your time, ma'am. I'll study more to it. Which Artis package is the best? Start with Artis with the very basic plan. I will not say that buy their most expensive thing. Start with something very basic. Start with their smallest plan. Take their trial round. See it if you like it. Just because I like it and it resonates with me doesn't mean that it will resonate with you. So you can totally check it out for yourself. I'm teaching you guys what works for me, right? What I like to do. Now it is up to you. You want to do that or not. Also, this is my referral link. It will be great if you guys use my referral link and sign up. In that way, it will obviously help me, and you will also get the link exactly which to download. And yeah, make sure that you are downloading from the link which I've given here. Save it and keep it. And any prop firm, Market AI, anything you want to sign up, you can use my code Soumya for a discount. And this is the Artis software which I have keep footprint open when it comes near our zone, take entry with amazing Nishan. That's exactly what I've been saying. Okay guys, I know it's been 2 hours, but just so you know, this is not everything. We still have a lot more to learn. But I hope that if somebody is very new to Artis, or if someone's very new to order flow, I hope that this is something which opened your eyes, and I hope that you understood everything. We'll keep coming live on YouTube. We'll keep doing more such sessions, and you can learn more about this. I have a task for you guys. Download Artis today. Use the link which I've given you. Download it. Don't download it on Mac. Download it on Windows laptop. Download it, go through it, try to understand it, watch YouTube videos on it, and then I will keep another session soon. Also, if you're not on my Insta, I'm sure everyone is, but it is Soumya Sasun. And this is the Artis link again. Thank you so much, guys. It was great talking to you all. Bye bye.